Welcome back, guys. Welcome back to the Vertical AI podcast. Today I'm here with David Friedman. David is David is an angel investor and part of TCA Ventures in Orange County. I'm very excited to have him on. Welcome, David. How's it going?
How you doing, Peter? Always a pleasure to be here and share with you some thoughts on AI and angel investing. If I can take a second, I'd like to just introduce the organization that I'm with, just in case people don't know who we are. Is that okay?
Yeah, of course.
Okay, TCA Venture Group is renamed from Tech Coast Angels. We've been around for about 28 years. Started in Orange County. We currently have six networks. We have TCA LA, TCA Orange County, TCA Inland Empire. Then we have licensees, TCA Southeast, Pasadena Angels as part of our network or our group, actually, and Meta Angels, which is a specialty group that deals in medical health tech and life sciences, is also a network within our group. We invest in a variety of companies in a diverse set of markets. About 40% are in the life sciences, healthcare area, but we do a lot of work in technology. So with 400 members, we have ready capital in our funds. We also do sidecars to complement the investments in our funds.
Great. Yeah. I've uh I've worked with TCA before. I've helped you guys take notes during the investor screenings and
Yes, now I remember you.
did you forget? Did you forget when I sent you the email?
Yeah, well,
Oh
it's
man,
what happens. You have a
it's only been
CEO
6 months,
here
David. Come on.
and there.
Yeah, yeah, but like just speaking from my experience, like that was very fun. Like just hearing all the startup founders talk, speak about their companies, and then like the internal due diligence meetings. Like I had a lot of fun participating in those.
Yeah, we've gotten a little bit better and more precise. In fact, one of uh, the technologies that we're using right now is AI to help evaluate and triage applications and to use it in part to complement that which is what we do on due diligence. And that's been turning out to be pretty cool. We've been using it for a few months. We're going to be rolling it out in a little more detail. And we figure over a period of time, we will have more opportunity to rely on AI. I would not rely on AI entirely at this point in time for a variety of reasons, but it's been proving to be very useful for us in doing our screenings and in due diligence.
Okay, is this like an AI application that just streamlines the workflow for the due diligence? And if
Yeah,
that's the case, like what does it help with exactly?
yeah. So what we've done is we've leveraged ChatGPT. We actually looked at ChatGPT, Perplexity, Claude, Gemini, and try to do evaluations of startups. We put in our criteria, and as you probably remember, we have like nine categories from leadership to competition, differentiation, business model, financial, go-to-market, team execution, and exit. And we've scored them or weighted them based upon what we have seen in the market as being the weights people put onto these categories as they make decisions. So, for example, leadership is the number one category. We weighted that higher than we weighted, for example, financials. We know product market fit is critical. We weighted that higher. So now we can take a deck, we can take an executive summary, put it through our system, which is a custom GPT we leverage off of Chat GPT currently. Doesn't mean we're wedded to it long term. And we come up with a score very similar to a stock score when you go into like Fidelity or Schwab or somebody like that. And that complements that which the executive directors do or the team or the pre-screen team does. It gives them more insight into the scoring. The goal of this is to take a look at scores that are above 8 and move them directly into screening, and scores between 7 and 8, which is the majority of scores, to actually move them into pre-screening. The scores significantly below 7 probably need a little more work. And we've been testing this model. We've gone through probably about 30, 40 different startups. And again, we're using it as a complement to our triage because we get a lot of applications in, but we don't make decisions exclusively based upon the AI model. At this point, the AI models are not perfect for that.
Got it, got it. Cool, cool. Yeah. So just based on what I'm hearing, right? Like this AI, it's mainly used during like the pre-screening process. So like when startups when they file their applications, like you guys will have like a ton of those, right? So like this AI program, it goes through all of them and then selects the ones that you want to invite to come to TCA and pitch.
They've already applied to TCA. The question is, where do they fit into the workflow, be it those that go into pre-screen, those that go into screening, or those that get temporarily, sorry, temporarily rejected, or questions we have to send back to the entrepreneur before we consider it.
Okay. Yeah, so is it like do you use this after they presented their pitch already?
No, we use it before they actually present it, right after they apply. So
I
we,
see, I see.
it's a big funnel. So we have a lot of applications in. We want to narrow it down eventually to invest in the extremely high potential deals. But early on, we take a look at the applications, and the application normally comes with an executive summary and a deck. We can make some pretty quick decisions based upon that. Do they have all the elements that we expect them to see in the pre-screen? Certainly the AI can take a look at that and do almost like a checkbox. So we use it for that purpose.
Got it,
And then
got it. Cool.
have some fundamental analysis. And it allows us to, again, it's generative, right? So I can ask questions if I'm not sure, but I use it as a complement to reduce the time it takes just to review the application and to, figure out what questions are missing, what data is missing before it goes into application, just saves time. But again, we don't use it exclusively, we're just rolling it out. Eventually, we'll incorporate that as part of our normal workflow with our deal management platform. And that's what we're working on now.
Okay, I see. Yeah, so this AI basically goes through it, and for example, it's missing like the traction section in part of their like as part of their presentation. Then like that's obviously like a red flag, right? So then that would lower their
Yeah,
score.
yes and no. I mean, so let me go step
Okay.
back
Yeah,
because we've
yeah.
divided the AI into two parts, technology, which may have traction or betas, and then a different one on medical and life sciences, which probably don't have a lot of traction because it's earlier.
Oh, that's
So we've kind of changed it in the weighting systems. The ones on life sciences have to have clarity in terms of what the FDA will do. So that's incorporated in that custom GPT. While in the technology arena, there's no FDA process, so we've taken that part out. So we have two custom GPTs for two different reasons. We may refine it over a period of time.
I see, I see. Got it. Yeah, and so it's based on ChatGPT. Like I'm kind of curious, like did you guys like fine tune that model based on like past like historical TCA data, or like did you just like create an agent using like by describing it, like what it should look for, or is it like a
It
actual
actually
like
was a
specified
it's a
model?
combination of both. So we've done it. We tuned it with our own information, and added to the LLM, in part. So it's like a hybrid, it's like a hybrid LLM we're using. Think about it that way. But we use the standard LLM added to that in our custom LLM, used our history to figure out how to improve the model. But we told it this is what we want to see. This is the format. This is the kind of things that give it a high rating, things give it a low rating.
I see. Cool. Yeah,
Sorry.
that's super interesting. Yeah, I'm just kind of curious. Like, a lot of people like are interested in the venture space, and you have a lot of experience. Like, do you want to just kind of describe TCA's like due diligence process, like at from the very beginning all the way until you do write the check, and like what are you guys looking for at each stage during that process?
Yeah, so let me start from the beginning. We go out and we actively try to source deals. We try to find deals through different pitch contests, through maybe Pepperdine, Most Fundable Companies, Pismo Ventures, Quick Pitch, face to face with entrepreneurs, which Ray Chan runs in conjunction with either Chapman or with UCI. We do work with some of the schools. We're tied into the Angel Capital Association in their syndication. So we try to source deals and have deals apply. So we get this big funnel. After the application comes in, that's when we may use the AI model to try to sort them out and triage which ones go into pre-screening. So it goes application, pre-screening, we're a group of maybe between 5 and 9 people, do a thumbs up, thumbs down, whether or not it goes forward. Once we think we finish that, if it goes through pre-screening, goes into screening. And then we have to have a certain number of members say, yay, this is really cool. We'll move it forward into due diligence. We'll put together a team, set out some questions for the CEO that are immediate. And depending on that initial discussion with the CEO, we'll give him a longer or her longer questionnaire, which contains a variety of data we want to find out about. And then we'll have more conversations with the CEO. Once that is done, then we say yay or nay, and depending on, which entity it is, and all of our 6 different networks do things a little differently. But if we have a certain number of people saying yay and we have a fund, we invest through the fund, and then we look for sidecars. The sidecars are either direct to the company, or we set up an SPV, or maybe the company has an SPV that we can, participate in. So that's the process. From the time it goes from screening into funding, the goal is to be in about 30 days. Sometimes we're better. Fastest I've ever seen it was in 2 weeks. Actually, we did one that was that came to us by one of another founding CEO that we invested in the past. He came to us on a Monday and we invested by Wednesday, but it was only a few of us that said we'll take the round. So that was kind of weird, but that's sometimes
Right.
what happens. Because if we see, it's really important to look at the CEO, right? So if the CEO has been successful and he's done this before, it was a he this time. We said, makes sense. We took a look at it, and a few of us invested very, very quickly. Doesn't always work like that. We did other deals, fastest I've ever seen, that come through the system and go through the normal due diligence. It was about 2.5 weeks. I can't honestly tell you how long the slowest one was, but it was several months
Yeah.
for a variety of reasons. And I don't remember the outcome of those. Sometimes they get waylaid, sometimes they get funded. Depends. And
I
we
see.
also look at not only new deals, we also look at follow-on rounds, which take a shorter time. So it really depends. So our system is relatively flexible. Different groups and different team leads do things a little differently. And we accept that. The goal is to come up with something that makes sense for the investors in a format and in a report that they can actually use, analyze, and say, yeah, this makes sense to invest, and we'll do it. Or not invest.
Right. Right. Cool. Yeah, so since this is like an AI podcast, I'm just kind of curious, like for the companies that do go through the pipeline, right? Like let's say specifically AI startups, right? Like what factors are you specifically looking for? And like what kind of factors differentiate them from other AI startups? And maybe like what are also some red flags that you look for?
Well, let's look at the companies first that are more prone to using AI in the areas we want to invest in. I'm giving a talk next week on technology and healthcare trends and where AI fits in. And when I look at the trends coming down the line, AI is probably represented in about 80% of those, be that for using AI to help with marketing, so in MarTech, looking at it in advertising technology, using it in fintech to make better decisions based upon your background, your interests, your risk profile. We're seeing it used in car leasing and car financing. So we're seeing it there in terms of using AI to come up with better models We're seeing AI being used significantly in the medical arena in finding new molecules, finding different opportunities using DNA, recombinant DNA in precision medicine, in doing diagnostics, in doing curative. So not only diagnostic, but therapeutics. So I can use AI once I find out what the uh, maybe the assays look like, and then it tells me what my high probability of success is in using some kind of a therapy. So we're seeing AI and all the deals that we're seeing, about 80% or more come in with, and by the way, it's AI. And by the way, it's this. Now, it's like it reminds me of the old days in the dot-com era in the 2000s, as well as, in the old blockchain. And it has blockchain, and it's a dot-com, and it's this. Sometimes the AI is an algorithm, sometimes it's a customized, specialized LLM. Those are the ones we're most interested in because that's where I think the key element is to use AI correctly.
Mhm. Yeah,
So,
do you want to give an example? Like, in what case would a company saying, "Okay, we're an AI company," like make you like start being suspicious? Whereas like whereas when a company comes in and like you're actually excited about their AI use case.
it's a hard one. Let's take a look at a simple case where you can take pictures of your skin, okay? And when you take pictures of the skin, I can feed that into my AI model, which has a variety of different sources that can actually take a look at the probability that skin lesion is cancerous, non-cancerous, and even determine the cancer. Okay, so that's one area where you can use it for diagnostics. And
Okay.
then if they take a biopsy, they put it into an assay and they can use AI, based upon what they have in their data, their own LLM to determine what the high probability therapeutics would be.
Right, right.
So
So,
that's how the AI would be used very simply. In other cases, God, it's all over the board. It's used it's almost like using a lot of taking a lot of information and sorting it into a more meaningful way that you can do your own analysis. So that's where AI is today on my mind. It can't be conclusionary. It can't say, here it is. This is the answer. Doesn't work like that. But it's really great that I find in following instructions.
okay.
So let's say, I'm stock trading and I want to find the right stock based upon, my technical parameters or um, my fundamental parameters. So I can look at technical charts. I can look at some fundamental underlying parameters in the stock and how it's done over the years. Where AI is really useful is following the instructions you put into the custom GPT, and it says, yeah, it makes sense. It's on the consideration set or not. You still have to do some more research. So it's great at following directions. It doesn't really do a great job of thinking for itself, but it gives you more opportunities and a broader picture. And that's the way I think AI is set up today. Now, I may be wrong. There may be others that are working on things differently. But I also find that different AI systems do better or not as good as others. So when we did this AI for triage of applications, I found that in my mind, at least when I did it, and others can disagree because we have different prompts. We found that the chat GPT was a little more cautious than when I used Claude. Claude was a little more optimistic. As an investor, I'd rather be less optimistic, So it just they're fairly close. They do certain things the same way. But again, I think we're in the early stages of using AI for making clear decisions. But where it's actually being used is giving us options, alternatives, and analyzing a variety of data in a way that puts it into priorities or context.
I see, I see. Okay, so basically, like, you think that like ultimately humans will still be the ones that are carrying out those decisions, but AI will make our decisions more informed.
Yeah, it's sort of like the old business objects we used to use, 20 years ago in making business decisions, but now it's a lot more It has a lot more data, it has a
Yep.
lot more context, and it can train based upon the way you are talking to it. The other thing that I found very useful is the at least Chat GPT and me, we have a good relationship. So it
Hmm.
knows how I think and how I want to think, and it helps me figure out my thinking correctly. And it may even chastise me. I've even chastised it, and it comes back and it talks to me. I think that's pretty humanistic. And we're finding if there was one interesting uh, presentation we heard the other day. Robotics is another area where AI is coming in handy. And there was a company called Metasol that has an AI system that is used for avatars and robots to make it more emotional. So it looks at you, it looks at me, it looks at others, and you can actually tell the robot to have a certain emotional state as it talks to you. So I can have a robot doing things in my house like cleaning, getting me a beer, being a companion, rooting for my favorite football team so I don't do it by myself. And it can actually put the software into the robot to make it act more humanistic and emotional. So I thought that was pretty cool.
That's pretty cool, man. Like how were they able to train that just on a bunch of like emotion?
I don't ask me that one. I don't know. I mean, he has a patented technology. He's a really smart gentleman, and it made sense. I think he's really early on in doing it. But the logic is there, and that's something that will take place. Is robot? I've seen just a lot of robots. You've seen robots. They're all different categories. Some are more, dog robots, humanoid robots. They all serve different functions for different reasons. And I think the emotional bent that you can put into a robot or an avatar, makes sense. So let's say I'm online. I don't want to just get a plain text answer. Wouldn't it be nice to have Peter Ma talking to me when I ask a question and it comes across in your genteel way versus maybe somebody asking me a question? They don't like New Yorkers really, and they don't like this brusque, direct attitude. So you can change using AI the context and the emotion that you have in the avatar or the humanoid, figure. I think
Right,
that's
right,
pretty
right.
cool, actually.
Right. So like it'll be hyper personalized to the individual, right? Like if you got this
Exactly.
rapper, like
So
it'll speak in the
exactly.
some kind of
So
way.
hyper-personalization is where I think the AI systems are going to come in. And that's where a lot of the medicine is because you're going to want to hyper-personalize your diagnostics and also on your treatment level.
I see. Cool. Yeah. Like the one thing that I'm kind of curious about, right, is like how do you analyze the competitive advantage, the moats of an AI startup? Because like a lot of these like LLMs now, a lot of them are language open sourced, right? And like so, and I feel like and software is replicable to some degree. So like, how do you figure out like, okay, like the startup, like how can other startups not be able to replicate that?
Yeah, that's an interesting question, and I don't think I have the perfect answer. But let me pose the following. If it comes from a general LLM without any kind of other information, it's kind of less useful than one that has the LLM and adds specific detail on other history that you have. So it's a hybrid LLM that's owned by you. I think that's the nature. So when we look at differentiation of the AI, now that's only one part of making of understanding whether or not the company or the product is differentiated. So it's a part, not necessarily a big part or a small part, depends on the kind of company. But the fact is, when the LLM has specialized training using additional data that maybe just for argument's sake, let's say it's a real estate LLM. So let's say I'm Compass, just for argument's sake, and it has all this data from all the sales they've done over the last 5, 6, 7, 8 years. It adds to the generalized LLM. Their specialized LLM allows it to do other things that I cannot do if I were to try to ask the same question through, a feedback loop,
Mhm.
the
Okay.
AI.
Okay. So then
So I look at specialized LLMs being a differentiatable item.
okay. So is it like the fine-tuned data then? Like you have like the general data that's trained on everything, right? And but then you also need that like private fine-tuning data to actually get to that.
That's
specialized LLM.
yeah,
So
it's
it's that
exactly
data that's
what it
valuable.
is.
Hmm.
Yeah, it has to be specialized and it has to be the current generalized LLM has to be augmented with specialized data into this hybrid. So let's say I don't even have an LLM. Just for argument's sake, I'm not using the generalized LLM, but I have so much data in this area. I create my own LLM that's specialized. That's also a very big benefit. And the AI using that specialized LLM certainly provides a differentiation than somebody that uses a generalized LLM.
Yeah, yeah. Is there like a startup that you've encountered that has that? Like has their personal data and like how did they get that data?
Well, I don't really know of a specific startup. I know that TCA, in doing its work on the AI system on triage, will use the general LLM and complement it with our own data. So I know that. So it's one way to look at it. I can't tell you off the top of my head a company that's using a specialized LLM, although I can make a conjecture that the ones that are doing DNA testing, medical molecule development, clinical trials for specific specialized areas probably are in the specialized LLM or creating their own LLM.
Yeah.
That's I've seen some of it, but I can't specifically tell you company A has done that. And I'm not sure I want to. I mean, that's their private data. That's something
That's
for because we don't share data with anyone.
Mhm. Yeah,
So I'll just talk about generalities. I can tell you what we're doing in TCA because, you know, it's not the end all be all answer, and it's something that we know other people are doing as well.
I agree. Yeah. Like around last week, I spoke with this prior CFO of this biotech company. They do like breast cancer. Like after you get after you get the breast cancer treatment, like you still gotta undergo a bunch of tests, right? They do like some sort of test in that way, and like he basically said that their main competitive advantage is their data. They
Right.
came out of Mount Sinai, so like they get like privatized data from Mount Sinai, and they basically said like without that, like there's no way their model is gonna work, and it's very hard for like other startups to spring up because there's no way for the other startups to access that Mount Sinai data that they have.
Yeah, so that's a perfect case. You have a whole bunch of records on different DNA, different genders, different ages, different demographics, different ethnicities, and you have different treatments. They have this big LLM that they've created over time. They can now put the specifics of that person that's undergoing treatment and come up with a personalized treatment system or verification that the diagnostic works. It goes back to my earlier comments that that's where AI in medicine is really useful in my mind.
Right, right. I see. Oh, cool. Like this is just more about TC in general. I'm just kind of curious about like the structure for investment, like in an angel investing group versus like a traditional VC. Because I just feel like in a traditional VC, right, it's probably more like the decisions are made more hierarchically, right? Because like it's got more of a corporate structure. Like how does TCA differ, and like how do you see like do you think like in what ways it's better, and like in what ways you think I don't know the
Well,
VC structure
that's
is
a
better?
kind of a loaded question. I mean, there's angel groups and there's family offices and there's VCs and there's micro VCs and there's the big VCs. But fundamentally, the angel groups put their own money in. So when we have a deal coming in, each of us has contributed either directly into the fund or we write checks individually into sidecars. It's done very democratically. So we have people voting. If I'm in the fund, I get a one vote per dollar investment. So we make decisions based upon democracy, democratic vote. Okay, everyone participates, or to the extent they want to. In the VC, there's usually an investment committee that works on this. And there's general partners and limited partners. Limited partners have less of a say. It's usually through investing in a fund. General partners put in their own money to a point, but they are different. They get a carry or percentage of the profit, and they get an expense. Normally, angel groups don't have a carry, and the expenses are basically um, paid for by the membership fees. It's a little different world. Also, we're very much earlier stage. We're at pre-seed and seed. VCs are coming downstream. They're investing in a lot of pre-seed and seed, but fundamentally, the main VCs that you hear of up in the valley, they're at later stage. They put in a lot more money. You know, different. You know, I look at ourselves as a mini VC. I've always said that.
Okay. Oh,
We're like a
got it. Yeah.
VC in a more of a joking manner. We serve a purpose for a lot of companies, but some companies that need tremendous scalability, a lot more capital. Good example, Tesla would never come to us or SpaceX would say, we'd like $1 million on a $4 million valuation. VCs, however, when they have these big 100, $200 million funds, and Tesla says, well, I'd like, $50 million to build a plant, we may get a few of those VCs. We attack the market very differently. We look at different kinds of deals. On the other hand, the VCs will rarely say, I want to participate, in early animal trials of a new medical molecule that's going to cure lymphatic cancer. It just doesn't compute. So
Got it.
different world, different strokes, different folks. We all serve a purpose in some way. We actually work together. We look at in TCA what I call path forward. We have companies that have been successful, companies that are growing. We want to help them get in touch and in front of the VCs so they can get follow-on funding if it's beyond what we would do. That's an advantage to the company and it's an advantage to us because a lot of companies fail because of lack of financing. We want the better companies to get financed, even if we have to get a little diluted because the pie is so much bigger. I wouldn't mind having 1% of Facebook at this point.
Yeah. Yeah. I
Think
agree.
about it that way.
Right. Okay, got it. So basically, like pre-seed, seed, they smaller companies would go to TCA, and then once they get to like Series B or something, and they need like more funding, then they would
Yeah.
go to a
I mean,
VC.
there's an overlap, but fundamentally we do pre-seed, seed, late seed, bridge to A, early A. Yeah, occasionally we may see some later A, especially with our Meta Angels group. But when we get into B, C, D, E, F, G, final later rounds of financing, much broader, much more aligned with growth. Those are VC oriented. They have bigger funds, more money, more capital, what they call dry powder.
Okay. Yeah, sounds good, David. Thank you for coming on and taking time out of your day to speak with me. And actually, you actually run a podcast yourself, right? TCA Crossroads.
We do, yeah, we do TCA Crossroads. It's something that I started about a year and a half ago, initially with one of our entrepreneurs, named Constant Tukulescu, and now Dave Burkus, who's a super angel, and I run this podcast, and we cover a variety of things. We cover topics in startups and innovation, and we cover meet the entrepreneur, successful entrepreneurs, even non-successful ones. You can still learn and then also meet the investors so people can get a good perspective. We're on Apple, Spotify, and YouTube. And, feel free to join us. As they say, like and subscribe. It counts.
Yeah, definitely check that out. Like I listened to a couple episodes, very interesting, and a lot of good tips on actually like presenting, pitching if you do want to get into the VC field. Yeah,
In the angel world, too.
yeah. Sorry, my bad. I keep mixing up these two. Uh, angel investing. Yeah.
Anyway, good to see you, Peter. Thanks for having me on. Appreciate it. And for all those out there, if you're interested in joining TCA as a member or becoming an entrepreneur and getting funded by TCA, go to www.tcaventuregroup.com. Take a look at the groups or the networks we have. It'll tell you their investment strategies and theses and apply. And we look forward to helping you out, seeing you guys, you entrepreneurs, on the cover of Forbes magazine, preferably.
All right. Thanks, David.
You take care of yourself, Peter. Good to see you.
Good to see you.